News coming out of the US from the Fed's Bill Dudley last night, saying that the first rate rise is a long way off and wouldn't come until employment was down at 6.5%. So they're maintaining that support there for the markets. For us, for this wave 4 here that we're looking at through here, as I mentioned some time ago, that this is a weekly chart here. The wave 2 here is normally smaller in terms of time than wave 4 here. So we've got about 11 or 12 weeks here, where we've only got sort of a good half dozen weeks here. So it's still, it's still a little bit sort of small in terms for wave 4. So we need to be mindful and not get carried away that this market can just push straight up through here. So with that sort of caution in mind here, we're sort of going with the two sort of options here that we're going with, and one of them is the A, the B, and the C here. The other one, as I pointed out before, is that we would have a little sort of pullback down into here first, bit of a complicated correction before we saw further sort of upside through here. So we're mindful of this situation as well, and the way that we're handling this situation is working out or understanding the move coming up through here, and that move coming up through here is either in, if it's in 3 waves, well then it's corrective, and then we will see this move down through here. If it's in 5 waves, then we'll just see this continue to push to the upside here. So this is the little structure that we're tracking here, and at the moment it can be counted in 3 waves, and it hasn't developed into 5 waves just yet in this particular structure. So if we pull this apart a little bit further, here it sort of looks like this here. The cash market would look different from the futures market, of course, because of the extended trading hours. But look, in one way, that's why we've got it here with wave 1 or the A wave, 3 up for 1, back for 2, or the B wave. And then it seems that we've got like the 1, the 2, the 3 and the 4 in here, and the 5 that may not be finished just yet, and then back for either a top in for wave C, and we'll be moving lower from this point through here, or we'll just pull back to here to the wave 4 of 1 lesser degree, and then we would see a move to the upside from that there as wave 5 here. So the 1, the 2, the 3, the 4 and the 5. And if we do get, it probably won't be that long really, because because these extensions in the 3rd wave, that means that wave 1 here and wave 5 would be about the same. But if we do get those 5 waves, do get the 5 wave structure in there, 3, 4 and 5 here, then we would be followed with an A wave, a B wave and a C wave here, and then further upside. So that's sort of what we're looking at. We've been long in the markets, in the Australian markets and the US and the UK markets in this run up through here. But now we need to just be a bit more diligent around this area through here. We could probably say on the bear side of things is that if the 16 became, the retested resistance, we'd see a move down through there, and then we would see, this sort of situation sort of unfold through here if that was going to be the case. So that 16 there, for the time being, we can just call that a line in the sand, and let's just watch this play out through here. So yeah, I guess if that, the other side to look at this too technically is that if the market pulls down below the top of wave 1 here, then that's technically an ABC correction up through here. So look, it's just a little area that we need to work through, and that's what we'll do. The Dow Jones is the same as well. It's working across into the 15,000 through here as well. The 61 point retracement down through here is just above the 15,000 there, so we can expect for a few reasons that there will be sort of resistance there at the 15 there, and as you know, it's we'll see that market work work across there as it is. So let's just see how that pans out through there. But once again, as we mentioned, the wave count up here can be counted in both ways. It's essentially retraced to the 61.8 retracement level. It does have an ABC correction in here, so it is a valid turning point, and we need to be mindful of that. The European market and the Australian market are a little bit different. It's yes, they have moved up through here, but once again, it's appearing like an impulse wave up through here for the FTSE, but it would obviously still follow the US markets as such. I just want to move on to the Australian market actually. One of the first things I want to point out here is that this is the XJO, the cash market, and these are monthly bars here. So we can really see straight away here, keeping it really simple, is that the 4900 here was the support through here, and now it's being retested as resistance through here. One of the other important points here too is the volume. When we're looking at these situations in any time frame really, is that we can see that well, if we just take these last three bars here, we can see that moved up there, but it moved up on lower volume than the previous bar. So we know that was slightly weaker. We could see this one move down, and that had more volume in it than the previous bar. So we know that the sellers are in control here. Now we're coming to the end of the month, so we can see that the market's dropped down. It's moved back up through here, but it's doing it on lower volume. If this was going to be if this was going to be a strong bar here, we want to see the close of this above the open there, and we also want to see more volume in this bar than this bar here. So we want to see more volume coming to that, and so forth. So at this point here, it's a move up on lower volume, which is actually weakness. So that 4900 thereabouts is where the supply starts, and we need to be mindful of that. Now, this is obviously being driven by the banks, and if we have a quick look at the banks while we're here, I guess. So just bear with me for a tick while I just sort this out here. Just I like to use CBA because it's sort of one of the leaders there. So with the CBA one here, we've been looking at most of the banks coming down through here as a 5-wave structure. So we were looking for essentially 5 waves down like this, and then we were looking for a counter trend pulling back up 61.8% of that move that's coming down through here. So for CBA, that would be around the $70 to $71 in that sort of area there between the 50 and 60. Now, in this ABC correction here, the internal structure for that would be this here. That would be the ABC. That would be this C wave here, the B wave and the C wave. The C wave is always in 5 waves, so we'll be looking at something like that there, and we can pretty much put that in here. And the reason for doing this is that at this stage we can see that we've got up for 1 and back for 2. So this is like the 3rd wave going up through here. So it's likely that we'll see the 4th wave come into play. And Thursday is always a good day for that too to occur. So it can open. Thursday is known to open higher and then trade lower throughout the day. So we need to be mindful of that. But if it does trade down today after opening higher, if it trades down on lower volume, then we know that Friday and Monday will play out, and we'll be looking for this other move up through here. So when we look at that on the intraday chart, which I brought up here, we can see a sort of 20-minute chart. We can see that we've basically got 5 waves here for the A wave, the B wave pulling back, and now we're in the C wave moving up. Now in the C wave moving up, the gaps normally occur in 3rd waves, and the biggest gap is here. So this would be the 3rd of the 3rd. It would also be the center of the trend, really. So we could say in a way that we're in the middle. So we could take this distance of this move through to here, and we could just pretty much put that there. So that would be our target to the upside. So we've basically got from here, we've got We've got the wave 1 here and the wave 2 here. We're looking for a wave 3 today somewhere in here. We're looking for a wave 4 to pull back, and then we're looking for a wave 5 up there to complete it at that point there. So that's the timing of it, and this is important too for our robo trades as well. So we got to kind of look at taking some profit today. Maybe because Thursday's a day where stops get taken out. That's the problem with it. If it is the bear day, and it normally is, and it's hard to sort of say that, but seeing the US markets up so strong, but I've seen it many times before. So you just got to kind of figure out the best way to handle your situation, either to take it at the top here, or allow it to come down and without taking your stops out, and then looking for that move back to the upside there. So moving on a little bit, let's have a look at commodities as gold is still falling. Okay, this is copper here, and this is a daily chart, and it's under a new contract now as well, so that means I need to relabel the charts, and I haven't done that just yet, but what we're looking for here is that we're looking at from this section here, we're looking down for wave 1, back for wave 2, down for wave 3 here, back for wave 4, and then down for wave 5, and then a larger move to here as well, and a possible another one down through here. So there's still more to go. So look, it's got support. However, it's going to be choppy. It's going to bounce around, but it's going to edge lower. So there's nothing really to the strong on the upside here for base metals, and its cousin there as well, the gold market, which would also have a relationship with in one way or another, is also moving down quite strongly here, as you can see through here. So yesterday we were looking at wave 4 through here, and then moving down. So just to point this out here quickly is that that we're looking at wave 1 here, wave 2 here, wave 3 is not quite finished yet. There'll be wave 4 here, there'll be wave 5 here. Then there'll be a retest of this here for a larger correction through here. So it's still bearish as such. If we look in the bigger picture here, you can still see it moving down. So 1300, 1200, 1100. So it's still still moving down. And this A, B, and C through here. I mean, we need to track out this, but you can also see too that this is a trend is like a tree to me, and it's expanding in its growth, and we can see that here this is also expanding as well. So there might be some time in the future where we have to remove this wave C here and put it as a wave 3. So that's a very high probability of that situation as well. But what we will do is we will just continue to count the waves down as we see that, and we'll count them down through the levels as we move as well. So look, the bottom line is to hold gold short especially in this particular market. The Australian market with the lower, depends. The gold's a tricky thing, really, isn't it? It's really sort of how much it costs to get it out of the ground, and then you've got the Australian dollar in there. If you've got companies with gold mines being sold in US dollars, if they're in Australia or they're outside of Australia, all these sorts of things. So you need to sort of drill down and have a look at those situations. The silver markets the same as well. So we've been looking to go short in this group 2 area here from the 1872 from this stage. The last 72 was up here as well. Sort of the same sort of patterns really, isn't it, from there and here as well. Triangle pattern and A, B, C, D and E here as a nice Elliott wave triangle. So we'll see this move further down through here as well. The oil market is Still moving higher as we talked about last time in here. Because we got 5 waves here, we're looking for another 5 waves over here, and it's normal to have a relationship between the length of the A and the C here. I can still see this has got more to go up through here as well. So it's just doing its dance across the 97 now, and of course oil follows stock, and with the Feds mentioning what they've been mentioning. I mean, there were strong employment figures. I think they were employment figures. No, I'm a bit mixed up there. Sorry about that. But there were some good figures coming out of the US anyway. But the Fed's comments on supporting the market has certainly pushed the oil up. So, okay, we can start from. Well, we start from this low point here. So we've got our little 5 waves up through to here. And I can still see, I'm not sure if this is a whole B wave here or part of that, I'm not sure, but I can still see that this is the strongest part here, the 3rd wave here. So we've got a further high to be made through here. And you can see that the angle is, so support on the 87 will see a new high above here as well. So yeah, look to go long from that point there. Right, let's have a look at FX. Okay, the US dollar. So look, it's pretty close to the 61.8 retracement level that we're sort of looking at through here. And we can also see too that the bars, these 3 bars here, were nice and strong and long and so forth. And then we can see it sort of struggling at this point through here. So we know that, you know, it is struggling through here. It's at its 61.8, well, basically meeting supply back up in this zone through here. So, you know, we can expect a corrective price action to unfold, something of this nature through here as an ABC, before we see further upside here. So, yeah, that's pretty much sort of it, really. So the euro will be doing pretty much the opposite as well. On the 30-minute chart here, if I'm wrong here, then I'd be wrong if support came in at 83.30. That's the top of subgroup 1, and then you'd trade long from that point and short the euro from that point. But while it's stuck in subgroup 1 here, then it's doing its job, and we can expect the market to have some type of correction within this range here, the group 1 and the group 2 range here. So it's a time to allow this to play out here now that we've been tracking our 5 waves to the upside. And that would be the same with the euro to the downside as well. It's just natural to expect a bounce off the minor trading level here, the same as the 83. The 83 and the 130 here, both minor levels. They're both top of group 1s. We can expect some sort of bounce here. We are getting that bounce. So we just need to allow that to play out. But we also need to be mindful that the euro can have very shallow retracement corrections. So we just need to be a little bit mindful of that as well. There is a count within all of this structure here that does allow it to have one more low in here and then the bounce as well. But I've counted it like this because this wave structure here is starting to get a little bit big for a wave 4 and a wave 5 to come down through here. So we've counted this down here as the 1, the 2, the 3, the 4 and the 5 to here. Then wave 2, the wave 3, the wave 4 and the wave 5. So the other way that we were counting it yesterday was basically looking at this down for wave 1 here, back for wave 2 here, and this all of the 3rd wave here and the 4th wave and the 5th wave. So if we do get that, then you'll know where we are. So and just a new low below here, and then a move up from that point there. But the point being is that what we're looking for here is we're looking for the short trade. So the short trade, we want some reasonable correction to come into play here. And then we're going to look to short it from that point there as from wave 1 back for wave 2 here, then down for wave 3. So it's still early, so don't go getting chopped up in this scenario across the 130 just yet. Let's just allow it to play out. The Australian dollar, we're looking for a short here. We're looking for the top of a wave 4 here. But as I mentioned yesterday, the intraday relationships really weren't allowing it to play out because the S&P 500 was pushing higher, and it's nice if we got the S&P and the Australian dollar moving together to the downside. But the wave four's holding quite sort of nicely here. If we just sort of drill in here, yesterday what we were talking about was a short trade setup, and the short trade setup was we were looking at this being a 5-wave structure to the downside. We were looking for some sort of A, B and C wave moving back. It's moved up higher than I'd thought, but that's life, but it's still there as a corrective pattern. And then we were looking for further downside to unfold at that stage, and we were looking for, you know, the 93 to be rejected or the 92.72 to be rejected as well. So that's still sort of the case here. We're just a little bit concerned that there can be another little high before we see downside. So this particular triangle pattern here that's unfolding here is very similar to this possible one here as well. So what that means is it means that we can have another break to the upside. Okay, so we just need to be a little bit mindful of what can occur. So if we do get a, we were going to use the 72 here, the 272 here, as retested resistance to short this, but I just think that we should just be a little bit mindful. This does appear to be corrective here, so it is possible that we can get one more spike down through to here. This move from here, this like 1, 2, 3, 4 and 5, if that's the case, we should get a move down to the 50 and a bounce back from there. So if we do get a move like this and then back up above the 72 there, that's fine. Don't chase that one down. If that occurs, then if this occurs here like this, after that, then take the short from, this area through here. But allow it to have one spike down here first, then a retest of the 93, or at least above the 72 there before you start looking at it through this way here, because if it does spike down through here, then it's got a chance to continue its move to the upside from that. But the other side to this as well, if this is a triangle, this would be an A, a B, a C, a D here, and then the E wave, and then the move up from here. Okay, so there's just a little twist in variation of what we talked about yesterday. So just sort of be mindful. Of course, if the 93 here becomes the support, then you'll just trade long from that point there up to the 72 and get out there, because we're still expecting a high there. What we do know is we know that, if I can get this chart back here, this move up through here is corrective. Okay, so at some point it will make a new low below here. So our situation is that do we get one more little move up through to here before we see that, or do we get it just from here and move down from here? So that's what you really need to sort of work out from here. So I'll just leave you to ponder that situation there. But any move down through here, it'd be good to watch the S&P 500 too, because if the S&P 500 locks under 1600, then we've got our bear market here, and you just trade short from that point there as well. So keep the US dollar and the S&P 500 in your mind's eye as well for this here. Alrighty, so that's it. So just a little bit of a recap is that I guess Thursday can open high and then trade lower for the day. I kind of got this feeling that we're going to have a sort of, we'll open a little higher, but not much higher, because there's not a big difference between the SPY closing price and the XJO cash price from yesterday. So a bit of a sort of a flat sort of opening there. So we won't put many trades out, and we'll be tightening stops up and profit targets up on our robo trades for the Australian market. That's it. Alrighty. Well, good morning and good luck.